All right. Welcome, my fellow stackers, to episode 20 of Mastering Metals. I'm so glad you're here because we have a very special episode tonight. Why? Because silver's spot price has taken off. All right. So if you're ready to learn, ready to have some fun discussing silver and gold, you're really going to enjoy this one. I'm Yankee. I'm your podcast host, and I'm joined by Cole Keller, the CEO of SD Bullion, and James Anderson, the senior market analyst for SD Bullion. Let's welcome them in. We've got Trump talks with Yi, president of China. We got Elon's done with Doge, and quite a spicy exit that he's had from the administration. The so-called one big beautiful bill is now with the Senate. The dollar is down, gold is up, and silver. Okay, wow, it was up like 2% today. It's been up almost 12% since the beginning of June. James, what the heck is going on here?
I mean, it's usually in June, and I have its data here. I pulled up the chart, like the last 50-year average, the last 20-year, 10-year, and 5-year averages. I mean, it generally goes down like 3-4% in the month of June on average.
Right.
This year is different. It's gone like straight up to start the month. So I mean, it's very exciting. Obviously, I think technically it just was due, right? It had bumped against 35 for so long,
Right.
and usually when it finally pierces these kinds of resistance levels, it has some energy, and to the upside. And when you look on like a technical trader chart, like what the price is, you got to look all the way back to like 2012-ish to kind of see where the last time we were up at these levels. And so it's been quite a while. It's been, for those people who have been buying all along, they definitely remember those times, but it's just a different market. This is a much bigger bull. We can see the kind of the structure that's being built, that's really been built since mid 2010s to, past COVID's pop. And then the structure that's been built ever since, the wall of worry that we've been building has been very, very big and wide.
Right.
And really in a bull market, the bigger and the wider the structure, the higher it goes eventually. And we can get into kind of the technicals as to why, like, this is so bullish. You have a situation where we're running toward 38 probably in this pop. I would think that's probably 37, 38. And it could go a little bit beyond that, but then I would imagine it'll take some time. It'll consolidate a little bit then. But the second half of the year, there's no reason it can't go beyond 40 and even do like a surge toward kind of scaring people, in the higher 40s. That wouldn't surprise me. So it's all good, and we can talk about like the bigger thing is like just how cheap it is still relative to other asset classes, and that's the thing that's so great. That means that it has so far to go.
I read that this move in silver is, really, really important as a confirmation for gold, because gold's been running up and now gold's consolidating some, but it's nice to see silver follow suit at least. You know what I'm saying?
Oh yeah. I mean, remember where we were just like after the Liberation Day, right? We had this situation where, the GSR, shot up and everybody got emotional, and it's understandable. Went to 106, 107 on a chart. Man, it was scary. That's the high, it's like the highest level other than COVID in like 1991. There was a time where it also hit 106, 107. And so it kind of matched that 1991 high. And there were people out there, and I saw them, they were making videos saying the GSR is going to 170 before it comes down, just nonsense, right? Like, I mean, you look back at it and you can understand how that, when people are kind of scared, they get taken by that kind of marketing. But ultimately, generally when you look at these kind of spikes, you have a month or two and it kind of rolls back down. And obviously we've rolled back down to where we were pre-Liberation Day. So we're back at 90.
Yeah.
So
that gold to silver ratio, 90.49 right now. That's so close to breaking below 90. That is pretty
it will. Like, the other thing is, you got to remember on the long-term basis, when it does these spikes, generally the reaction later is dramatically downward. So, for it to go back, GSR go back into the 80s and then the 70s, even second half of this year, that's totally reasonable. That's something that normally happens when it does these crazy spike vertical. It usually has an opposite reaction to the downside. So I would imagine the GSR will continue tightening throughout the rest of the year.
Now, one of the things that I remember reading in the comment section on some of my videos last week, when this started last week and it was taken off, people were, yeah, they're so cynical. People are so jaded. Oh, they're going to slam it down. They'll never get through Friday. It's going to get slapped. The shorts are
Yeah.
coming in. And then somebody said, well, okay, it didn't, but it'll never last to the weekend. Monday's going to, it made it.
Right.
That was surprising.
Yeah.
A pleasant surprise.
Not only did it close well on Friday, but it opened strong, and it's confirmed it today, right?
Yeah.
So, when's the next red bar? I don't know, but like you have a situation sometimes where silver can kind of break out of a long-term structure and it can run for a bit. And I hopefully this is like a slow burn. I don't want to see it run too quickly, because you just don't want to see silver run too quickly, because then the chart can get sloppy. So I'd like to see it slowly burn toward 40. And then eventually clear the 40 and, do that kind of thing. And then, it can start running when it gets past 50, fine.
You'll let it go. Is that right? Okay,
Yeah,
fine.
You can let it release the hounds.
Release the hounds, yes. My prediction from the beginning of the year, I remember making it fun with Still Dragons. It was like, oh, we're going to pick, I said 40 by the end of the year. I really think it's going to happen. Yeah. But then I was wondering, man, did I guess wrong? And now I'm like, no, I think I guessed right.
Pretty good. Yeah, it's a pretty good guess.
Hey, Cole, how's it been at SD Bullion with this price, these price moves? What are you seeing from the stacker?
Yeah, so the retail stacker always has it wrong. They have it completely opposite of really where they should have it. So in the period of the last, let's call it year, we've seen with the price run up that people looking for an opportunity to what they would describe as taking profits, which I would fundamentally disagree with that as a prudent strategy for a couple reasons. Number one, you're joining the fray. So there's a lot of other people that are looking for that. And they're like, okay, silver's up to 34, 35. I'll sell my silver. Well, what happens whenever everyone looks to sell their silver? Unless demand is very hot, then premiums are going to go down. So you don't actually get to realize the premium or the price, the all-in price for your metal that you would like to, because the premiums are discounted. I'm sure people watching may have experienced that. We have the same thing day in, day out with our retail buying activity. And then number two, central banks and other large world entities have been net buyers, and more than net buyers, and we can get into it. So while the retail investor is selling and looking to, on paper, take a little bit of profit, the real money is almost price agnostic because of other factors, and they're taking quite a bit of ounces, and they're really, really loading up, which tells you they have a fundamentally different opinion on the price, right? So there's been some lulls in this last probably year and a half that we didn't see for the 4.5 years prior, where the price goes up. People, instead of seeing that as validation of their decision, if they have been a buyer of either gold or silver, they see that as a lost opportunity cost, where they just should have bought more when they bought, some period of time ago. So it's a short-term reaction that's incorrect, in my opinion, to a long-term trade or a long-term play. But we've had periods where it's been softer, but people continue flooding in and selling material back whenever the price says you're the first step down a path that is almost 99% chance why you bought it to begin with. Why are you getting off the train? We haven't even reached the first station.
So we need to keep our ear and our eyes on where the smart money is going. They're holding this. They're accumulating, right?
Yeah. So there's a data point, and I'll pass the ball to James, but Chinese insurance companies have never been allowed to buy gold and have it on their balance sheet, the largest insurance companies in China. And whenever you think about that and the fact that that policy has now changed recently for the first time, I think in history, it's a tremendous opportunity for insurance companies to take some of their risk profile and diversify it, not because they want to be necessarily net long gold or silver. They want to have a hedge against a black swan event that could impact tons of people that they do insure. Right. And so if you combine that where there's private interest, family office interest, along with public and sovereign interest to de-risk or de-profile their exposure to the dollar, which you have every incentive if you were employed by a foreign central bank to say, let's look long and hard at our dollar exposure after what we've seen in the last year and a half, probably longer than that, certainly with inflation, but let's call it last year and a half. What happens if maybe a 0.5% of those holdings move into gold, for example? Well, gold would be over $6,000 almost immediately, and the supply, let alone couldn't support it. So then we'd see this huge cyclone of availability, right? So
supply issues. Yep.
Right now, I still say the premiums represent a really good opportunity for people to get in as close to spot price as they've been able to the last 6 years, and we can get into that in the long run. Well, that's what we're here to kind of hypothecate.
Yeah. James, how has the COMEX been? I've heard that there's been some pressure recently in the last month, especially, or 2 months, at the COMEX. So is supply an issue? Are we truly seeing, I don't want to say silver squeeze, but a squeeze on this yet?
In terms of the COMEX warehouse ounces, they've been falling precipitously a lot. Let me see the amount that they're down right now. I mean, they peaked over 45 million total, but they've since drawn down 7 million ounces in a matter of, you're talking a smattering of a handful of months. So, it's gotten back down to, to the level that it peaked during COVID. And that drawdown took a few years to follow for that to cut in half, right?
Right.
So, my expectation is this time cutting it in half will probably be quicker. The speed at which things are happening now is kind of double, it seems, in terms of the speed of flow in and the flow out. So it wouldn't surprise me to see a continuous drawdown on both gold and then eventually silver. Platinum is interesting too. I mean, China, the fact that in April, last April, they imported 370,000 ounces of platinum, which was like it was the most in a year or so, at least. And that is 370,000 ounces of platinum is literally the amount of NYMEX platinum in all the warehouses combined. And so just on a relative basis, China just took that entire size in 1 month.
Oops.
Yeah. So it just shows you how tight and tiny these markets really are, and platinum's catching a bit, obviously, because gold, people in China have a long memory. They remember 2008 and the bull market that they created in 2000s, where platinum became twice the price of gold, right? And right now it's a third the price of gold. So they remember those days and they see platinum as good value. So I would suggest that they'll continue to have good demand for platinum.
And the other component that I'd throw in there whenever you're looking at larger deposits of metal for people to consider is the impact of interest rates and lease rates on what the holders of that metal are interested in doing with it. So just for example, this week, we asked one of the top 5 sovereign mints in the world in terms of production for an allocation or a batch of, I forget how many silver ounces it was. It was like 50, maybe 100,000 ounces of silver. And we were told we're 3 months out committed. So while it seems really quiet and soft in the US and the retail side, it's not that globally. Interest rates and lease rates have given people an entirely different incentive to operate their entire balance sheet. Very different. So whenever it is quiet is always kind of my point. The quietest time is by far whenever it feels like there's the least momentum possible is whenever you should really organize yourself and act if you are interested.
One of the things that I think separates some of the foreign markets, I say foreign, other markets versus us, is that a lot of central banks have already started easing. They're cutting. We're not yet. So I think you're going to see a little bit of a lag there in buying interest, at least in the retail, before it hits us, because I think it's coming. In fact, I was reading some fund managers and investment advisors were saying that we're already witnessing the early stages of a U.S. bond market collapse. And I don't say that C word, lightly there. Collapse is a strong word. But they believe it started, that interest rates could easily spike. I've seen anywhere up to 20% in the future. The fear is that there won't be enough natural buyers of our debt. If the Fed's going to have to step in, buy our debt, cut rates, buy debt, that's bad news for the dollar. Do you think that's likely to come?
So I think when you look at like the math in terms of what we have to do financially, I think the consensus generally is that they're going to have to step in at some point, and they'll probably have to change some things. They're probably going to have to make banks begin buying bonds. They're going to force banks. They're going to mandate banks keep bonds on their balance sheets up to like 40% of whatever they, in terms of whatever the bank is supposed to be holding, should 40% being in U.S. debt. And eventually, too, they may end up mandating that citizens do the same.
Oh my goodness.
Yeah. So that's later. That's the first of the banks, and then later is taking a portion of everybody's check before you get it in your from your W-2, and it going into a special fund, so you can help finance this great scheme that we have running.
I've got yeah, I think it's possible. In in this decade, there's a lot of earth-shattering changes, I think, coming from AI to all kinds of economic challenges that we're facing with China. At the top of the show, I mentioned Trump talking trade with Yi, president of China. I mentioned Elon. I'm not going to mention what's going on in Los Angeles. We'll just skip by that. But the big, beautiful bill and pushing this through. I talked with my local coin shop dealer, Tim, the other day, dropped the video today, and he gave me his take on it. What is your take on the fiscal acts that we're seeing in our government by Trump, by Congress? Is this a net positive or a net negative in the short term for us?
Nothing stops the train of spending. I don't see anything stopping that train. And Doge was cute, and it was fun to pretend that we were going to stop the train.
It was cute,
but then nothing stops this train. When you look at the situation of Social Security, Medicare, Medicaid, the military, all the things that we spend, nothing's been cut, and anyone politically that even talks about that, gets voted out or fired immediately. So we're just going to take this train as far as it goes until it hits a wall. And I think this last week of SD Bullion's YouTube channel, I put up a video. Jamie Dimon's out there talking like he's a bullion stacker. I mean, he's basically talking like at the point where, don't stack Bitcoin, stack bullets.
Stack bullets. I heard that. That was like, wait, what? You sound like a prepper. Forget a stacker. Yeah. What's going on?
He also said that there will be a break in the bond market at some point.
Exactly. It's going to break.
The bond market has a lack of liquidity going on, and they're going to have to step in at some point to rescue the system. That's what it sounds like. And, whenever that happens, it's always crazy in terms of the market. When it goes to liquid and the bond market doesn't work, everything starts stopping. You can really have real fear that precipitates throughout the market. And those are the types of situations where bullion shortages start occurring again in terms of the inventory retail level, getting products. You can all of a sudden find yourself, A, not being able to find it, B, having to wait forever to get it delivered, C, the premiums going through the roof. And so those things you need to think about. That could happen in 6 months, he said, within the next 6 months or within the next 6 years. He doesn't know the timing. But the fact that Jamie Dimon's out there talking like that tells you that he's not only prepared in terms of the bank will probably benefit, JP Morgan's going to continue to benefit, but the other thing is that, he basically is already positioned, and that's why he has no problem saying it publicly now.
Very interesting words from Ray Dalio too recently too. There's a lot of people speaking up about what's coming. A lot of concern. Now, I'm not a professional financial advisor, right? But I do help coach some people, especially those in my Buffalo Bullet and Yankee Cannon memberships. But my nephew, I don't see him in the chat because I know he watches, but he's not in there right now. But my nephew is buying a house. In fact, he just bought a house. He liquidated a lot out of the markets. He got out, and I've been telling him, take some off the table. Really, every time you have an opportunity, take some off. But I said you got to watch the bond markets, because when that goes, that is the bigger issue. Our debt, our sovereign debt. The markets could melt up. Okay, it could go up in a hyperinflationary scenario like Caracas, but it's the bond market. If we have to purchase our debt, if the Fed has to expand its balance sheet, in fact, it's already starting to ease up on its quantitative tightening, right? So you're starting to see them trying to position, I think, to cut rates and to start opening it up and maybe launch another round of QE if this thing gets bad. If that happens, all bets are off. Gold and silver are going to shoot the moon. That is like rocket fuel to the price.
For sure. And the other thing
go ahead.
I wanted to point out on the long term, and we were sitting here at 90 gold silver ratio, and silver's a breath away from 40. It's not that far. And then what comes next is the final boss 50. When that occurs, the GSR might be 70s, 60s. And so that just shows how much of a long run we have even once we get beyond 50. The other thing to remember too is that the S&P divided by silver is still at like absolute nosebleed levels. It's 163 ounces to afford one share of the nominal S&P 500. But that, in 2011, that got down to 25. And in the 1980s, like 70s bull, that got down below 10, right?
Mm-hmm.
So you have a situation, if you have stock gains, if you flip some of that into silver and look at a long-term scale, like 5, 10, 15 years tops, I would think, for this big type of rollover to occur and for silver to go into a mania, the fact that you could outperform the S&P 500 by a factor of 10, is pretty easy there. So
yeah,
it's just amazing the amount of potential that we have for silver to come.
I think it's time we take a look at some silver and gold. Cole, can you steer us to, just for a few minutes? I'm not going to spend a lot of time, but while you're talking, James, I was glancing off to the SD Bullion site. Could you maybe tell a couple really hot items, things that are going fast, something that people need to know about? And by the way, if you haven't signed up for SD Bullion's email blasts, you're missing out. They put out deals sometimes before anybody else sees them. So make sure you go to sdbullion.com/new and sign up.
Yeah, and we also have, with the email, we have the SMS offers. Sometimes we'll take product offers exclusively through a specific channel, just trying to reach people wherever it is they are. In terms of products right now that I'd say would stand out, I mean, we have gold maples available at $29 over spot, which is probably the lowest premium that it's been in.
What year is that?
7 years.
Is that
That's a random year coin.
Okay, some good deals. Oh yeah, there we go.
That's of course everyone knows what a maple is, but that's tremendous value opportunity. Pre-33 gold, which people may or may not be that familiar with. It's a completely secondary market. That and 90% silver, they ebb and flow, and they usually don't trade in tandem, where 90% has next to no correlation in premiums to pre-33, in my opinion. Now, maybe there's a chart out there that says they do. Off broader secondary markets, well, sure, I would entertain that. But they're both very cheap right now from a premium perspective relative to where they traditionally do trade. And so you can get a pre-33 piece of U.S. history, which is still basically an ounce of gold for a premium. It's not quite an ounce of gold, but for a premium less than that of a gold eagle, and it's 100 years old.
It's very raw, cool. Right?
So we literally have a banner up right now. It's in the rotation. I think it's in slot 4. So we have all St. Gaudens available and on sale. So
I did buy this from SD Bullion right here.
Yeah,
it was cleaned. I really don't care if it was cleaned. I think it's great.
Shouldn't. In my opinion, you should. I mean, unless you're a numismatist and you're able to do your own grading, which all the power to you. But gold is gold, right? So whenever these things come back, I promise you, if you're wanting to argue with a retail salesperson or your local coin shop and say, no, my grade on it is this, and they don't see it that way, you're not going to get a premium for it. So cleaned is fine.
This 1 ounce per Proclaim Liberty silver bar I'm looking at, that's a good deal. That is a really good deal.
Kind of like we were talking about earlier, this environment is great for the stackers because the deals are everywhere. Because there's so much material available that we, as a company, are able to be pretty selective whenever it comes to what we buy. We've had 90% deals available pretty consistently, where people can stack bags of silver, constitutional U.S. quarters and dimes, for premiums as low as melt, 0 premium. You're paying spot for it, and so it's. In a barter environment, say you're interested in the ability to have precious metals available to spend on a more transactional basis. These are 0.715 ounces per face value. So if you have 10 dimes, people can do the math very quickly. It's small, but there's silver in it. The U.S. used to have silver in their currency, which you wouldn't believe.
Okay, so these Eagle Stacker rounds, man, this right now, I think for 2025, this is the round of the year. Just like
we got something coming too. That I like the Eagle Stacker.
Yeah,
and I'm not taking away the shine.
Yeah.
But this is
maybe
just
you are
scratching the surface. I
love these.
We got some cool stuff coming, and if you like the Eagle Stacker, you're gonna really like what we got coming. Is all.
This is the one thing that Mrs. Yankee went ooh and ah all over when it
Really?
came to silver. I opened it up and she went, oh, "What's that?" I'm like, "You never do that on my silver." She's like, "That
Sounds
is
like
awesome."
it sounds like I know what to get her for her birthday.
Okay. Sounds good. A lot of good options. Check out sdbullion.com for your online bullion needs. Now, James, got to come back to you.
Sure.
Trump on Monday today held a roundtable discussion with his administration. He was with other guys too, I think lawmakers and business leaders. He wanted to detail a program that's inside the big beautiful bill. I guess the real name is tax and immigration bill, whatever. It's called Trump accounts, or I've even heard it called MAGA accounts. For every American baby born during his second term, he's got this program now that would give $1,000 for each baby to put in a tax-deferred investment account that would be controlled by the parents or guardians, and they could contribute more money into that account. I'm like, wait a minute, they don't have access to my account at my bank, right? My checking account. Where are they putting this money? What balance sheet is that $1,000 going? What account? Is it the Federal Reserve? Are they opening up the account at the Fed for this?
Yeah, it's an interesting question where the brokerage is going to be held in terms of the favoritism, if they use a private one or if they create something that the government uses. That's an interesting question.
I'm just my antenna goes up anytime. I have a CBDC antenna, right? And I'm really watching out for, I'm watching what the Fed is doing with Circle and USDC. Stable coins, because I think stable coins could be a backdoor Trojan horse into a CBDC like control. I don't care if you don't call it a central bank digital currency. If the Fed has control and trace and track, that's what I'm concerned about. My hackles went up when I heard that. I was like, wait a minute, where is this going?
Yeah, I mentally, when I look at this, it's difficult to even think through in terms of like child being born now in 2025 and looking out at their age by the time that they can get this stuff tax deferred and use it in the real world. You're talking about the year is 2085, or 2090, right? Like, do you think that this currency is going to hold out beyond 2050? So like, when I think about this stuff, like when I think about like doing like an IRA or like something like that for my baby child, she's only 7, right? And I think, it's better just to have her stack bullion outside the system, because I don't think the dollar is going to hold up in this iteration. And so, to have private wealth outside of the system for her is probably a smarter bet in terms of having more optionality, right? Where you're not tied down by a system that has rules and regulations so much. So, that's fine if he does a little $1,000 account stuff. It probably helps some people when they're young to like learn about investing, and that's a good thing. I think that's a good thing. But in terms of whether or not the currency will be around, they can use it. That's a totally different question.
It's selling return trips on the Titanic.
Exactly. That's a good one. All right. By the way, if you haven't or aren't watching James' weekly videos on SD Bullion's YouTube channel, you need to do it. He comes up with awesome insights. He really lets you know what's going on with the markets. James, they're really, really good. So everybody should be subscribed to SD Bullion's YouTube channel. Watch his videos every Friday. You will come away a lot more educated than you realize.
Appreciate it.
Yeah, I've been doing this for 12 years, and I learned something every time. Every single time. I love it.
It's a lot of credit goes to Nick Lard. If you're like a chart person and you're really analytical in terms of charts, the last week I ran into long-term silver charts like around the world. So all the major currencies, some of them are 200 years old. And so it's really cool to see, silver priced in Australian dollars for 200 years. Like, I mean, that I'm a data nerd, so that stuff to me is
that's a sneak peek into your next video, because it's going to be hundreds of charts. Now to the Greece currency.
No, this past Friday. So if someone wants to go see it, go to SD Bullion's YouTube channel and you can find those charts. It's fun for me. I enjoy that stuff.
All right, Cole, you're going to have to play fill in. Switch it or not switch it. You're going to play. I'm going to pinch hit you right now when it comes to our next segment, which is Retirement Insights.
Yes.
So Chase usually talks a little bit about it, but this is where I really want to speak to just maybe a few of the people in the chat. We got 624. I know there's someone in the chat that is wondering, what the heck do I do with my retirement, my 401k, my IRA? What am I going to do? And I know there is so many places where you absolutely should not put your IRA into a precious metals IRA. You'll get toasted. You'll get taken. You'll get taken to the cleaners. Terrible, terrible sites and companies, fly-by-nights. But SD Bullion is not one of them. I've been there. I've seen your depository. It's top-notch. You get to buy it and have it put right into the depository. You know what the prices are. They're not hiding stuff from you. They're not trying to upsell you on high premium garbage. Mm-hmm. It's a really good option to consider if you already have an IRA and you're looking to hedge.
Exactly.
Yeah, that's the key.
Yeah. You have funds that already meet all the qualified retirement account criteria that are already the same tax advantages that why you have them there to begin with. But say you want, like we've talked about for the first 30 minutes,
right?
Say you want exposure to something other than traditional, equity or bond markets. Mm-hmm. Then you can use those funds and set up a self-directed IRA.
Right.
Where we will assist you. And if you just go to sdbullion.com/gold and silver IRA, it's in our main mega menu. There's a number to call. You can request, you can fill in information, just email, phone number. You'll get information sent, and then we'll follow up with you and educate you to the best of our ability. But we try to do it all in-house as much as we can in terms of holding your hand and sending you all the forms. And then we also store it in our depository, which makes it very easy. Whereas most everyone else that tries to service this part of the industry, it becomes predatory pretty quickly, as you alluded to. In terms of our depository, the owner of the company has his personal metals stored there. It's extremely secure. It's consistently ranked as one of the best, or most, in other people's terms, impressive facilities whenever they're going around looking at, okay, where is this stuff? If you're a sovereign mint selling a bunch of metal or sending a bunch of metal somewhere, you want to understand that it's secure and they're not going to be a credit risk immediately, right?
Right.
So that's a huge priority. We take security very seriously. But in terms of the products,
so Rocco doesn't let anybody get near that stuff. It's fun. I witnessed it. Can I just address something really quick that's rolling in the chat? This comes up every single time that we do this, and I really think it's important to clarify. So I'm going to clarify what this is. I'm going to tell people what this isn't. And then I'm going to tell people what my approach is. First thing, this is what it is. It is for people who already have retirement assets already in the system. They're at risk. I don't know if you've ever read The Great Taking. I don't know if you know what the risks are by rogue governments to be able to potentially steal digital assets, digital wealth. This is a high risk. In order to get that out, you're going to have to pay some pretty hefty penalties. And I've been telling people, be very careful about yanking those monies that you put in. Maybe they were matched at some point by an employer, and you want to take them out and buy physical metals and put them in your safe. That is an expensive proposition. What you can do is find a place like SD Bullion and at least temporarily, okay, this is my strategy, temporarily put some of that into physical precious metals that is on hold temporarily with a depository like SD Bullion. I'm going to be 59 and a half this October, guys. And I'm ready to buy stuff and move some stuff into your vault. Pretty soon, though, I'm going to want to take some distribution and have it in my vault. That's perfectly fine. But it's not stacking. It is a hedge for people's existing retirement. Some people say, I don't trust IRAs. I don't trust any retirement accounts or 401ks. I don't do any of it. That's fine. I can totally understand. And I think it's important that you evaluate your risk tolerance. And maybe it's like, I don't want anything to do with it. No matter what my employer says that they'll match, I'm not doing it. I'm just going to put it in a gold, silver, or physically. And that's great. But if you already have it in there, and I talk to people that are in their, late 40s, 50s, they're like, what do I do, Yankee? Do I just yank it all out and lose tens of thousands of dollars in some cases? I'm like, no. Consider SD Bullion. Hedge it. Put it into physical metals. It is not only secured in their depository, it's segregated. It will have your barcode in your name. It's protected. And then it for 59 and a half, sell it back to them, or take it distribution and get it to you. So that's the mentality here. This is not stacking. Stack first. Stack your own, get your own gold and silver stack. But if you do have some retirement, consider it.
Yeah, it's like you could look at your existing retirement account whenever you refresh whatever application you have, and if you just say, snapped my fingers, and now however many dollars of that is in a safety deposit box with metal that I specifically determine and pick what metal, what premium, what's in there, and that's mine.
Yeah.
It's completely segregated, which is, once that light bulb goes off for people, for us, even though people hear about it, they kind of tune it out. Like, yeah.
Segregated.
IRA
What does that
stuff.
mean? Yeah.
What is it? Yeah. And it's
It means
once you go down the mental exercise, you realize like, okay, this is something to be really taken seriously because I'm already interested in the asset class to begin with, but I'm restricting myself to the asset interaction with new dollars that I contribute, which I know what inflation does for everyone. There's sometimes not a ton of new dollars to contribute, but you do have the ability to get exposure in the exact way that you would want to, which for us, what we pride ourselves on is the right product assortment at the right price with the right logistics. Okay, well, great. It checks all the boxes for people. It's not for everyone, certainly.
No, it's not. And understand that. I know, I talked to, again, my nephew. He's like, wow, if I had that, I'd definitely do it. But I don't, Uncle Yankee, so I'm not going to do it. That's like, I'm not telling him to do it. But if it is something you're interested in, you're watching right now, just how do they get in touch? What's the quickest way to get in touch and talk about this with SD Bullion?
Yeah, great question. Like I said, on the website, there's on the main menu. I don't know if you're showing your screen. You could go to it right now. There's this main section called IRAs. Right there at the top, it says request information. Just fill out your information there, and someone on the team will get in touch with you. But I want to also call out one thing that you talked about, the predatory nature, and I kind of touched on it too. It's really important for people to just choose wisely, whether that be what we're trying to do for people or what someone else is. Whenever you see oddball or really funky product in the marketplace, if your radar goes off and says that seems odd, who would want that? That's good intuition, because the oldest playbook in this ecosystem is for a dealer, which we would qualify as a dealer here, to go ask a mint to create a custom product just for us, where we control all of it, and then I will never advertise it except through my IRA program. So you'll never see a website price. You'll never see a secondary market. You won't, if you go look up, Yankee coin, unicorn, which is what I'm telling the people on the phone, you got to want this Yankee unicorn coin. You're not going to find it anywhere. So then how do you understand value? It's like you're buying a vehicle that you can't find in Kelley Blue Book. Well, eventually you acquiesce and you say, the value is maybe more than likely what this person is telling me it is. And that is the critical thinking failure point, in my opinion. So that stuff comes back online and it really suppresses premiums across the board. And guess what? We'll buy it back from people because we're interested in providing liquidity at the end of the day. And if you have it, bullion is bullion.
Right.
You probably
but
didn't.
You're going to lose. You're going to lose in that transaction. That's the problem. You did mention something though. You said Yankee coin. Wait a minute. Now, you and I have been working together on something, haven't we? And it's something like that. I think it's really called a Yankee Tim round. Isn't that right?
It looks good.
It does, doesn't it?
I think we're getting pretty close.
I think I gave you my final approval on it. And
I know.
Tim was here live Saturday, and Little Stacks brought it over and showed it. He didn't show the camera, but he showed it to Tim, and he was like, whoa. I like that.
Look,
he likes it.
It'll be interesting to see. I'm always critical. I want to see how the finished product looks.
You're a perfectionist. That's the thing. You're very, very picky.
Your audience is a perfectionist.
That's true. Yeah.
These people know what they expect whenever they get that box from the mailman, and perfection and nothing less. I don't blame them. I would too.
Okay, so we're going to start the Q&A first, but just soon. But first, is that going to be IRA compatible, the silver and gold Yankee Tim round?
It's a really good question.
Is it?
So the IRA
eligible. Yeah, IRA eligible.
Eligibility, yes, it technically technically should be.
Okay.
So here's another thing that people run into. So different depositories have different interpretations of what actually is IRA eligible. So it comes down to mint marks. Because if you kind of think of it in terms of you put yourself in their shoes, you're storing something in a segregated account, theoretically as a depository.
Yep.
That is more secure in the sense it's for a retirement account. So therefore you got to qualify mint mark, you got to qualify purity. There's certain people that allow some things and not other things. It comes down to, since we own our own depository, we're happy to say, yes, this is IRA eligible because we know what the guidelines actually are whenever they're written into the law. Whereas other depositories have zero interest in really doing anything other than, well, we've always known this product is eligible, therefore it's eligible. Anything new, we'll put it on a list and we'll review it in 5 years. Well, okay, great. But you didn't actually try. So it should be, but
Okay. You got to let me know because honestly, I think
print.
I want to put some in there, for at least temporarily,
Yeah.
into your depository, and I want it to be those. I want Tim to get some. In fact, can Tim and I come out
Here we go.
to SD Bullion together?
Yeah, of course.
For like an unboxing of these things?
That'd be fun.
That would be a blast. I would love
fun.
that. Okay. So, all right. We got a lot to talk about there, but people want to ask questions now. So I'm going to switch over to the Q&A section. And this is for both of you guys, or all three of us here. We got, what tier class is silver considered? Big test unit. What tier? Like gold is a tier 1 asset, right? Because of Basel III, right?
Right.
So what do you think silver is?
It's basically bullion for, I would assume it's basically bullion for private investors. I mean, banks are not going to be hoarding silver. It's too tiny a market.
Yep.
When you crunch the numbers in terms of bullion, and 90% throughout the world, there might be 300 some odd billion of it, So, I mean, that's just not, that's a speck in terms of, the gold market, in terms of the physical gold market. If you talk about bullion and bars that central banks hold, and then coins and private hoards, it's maybe 12 trillion. So it's a lot larger in terms of if you're trying to escape the bond market, and you have a lot of size to do so, which is what we discussed at the beginning of this. You have Metals Focus now is forecasting another 1,000 tons for central banks to buy this year. So that's 4 years in a row of record size central bank gold buying. You have JP Morgan now, analysts saying, if you have a half percent of foreign U.S. investments, 0.5% going into gold in the next few years, you're talking about $6,000 gold by 2029. They're printing that and putting it in Bloomberg. So that was published just last week. So we're looking at a true bull market, and now they're making statements that sound like stuff we used to write on our blogs. But now they're getting with it and finally admitting the fact that this is likely coming.
And I want to point out one thing too, when it comes to price and availability. I mean, we've seen 2 massive runs up in silver in the last 5 trading days. And what sort of broad publish interest is that getting, or like publication? What, are they talking about it anywhere? I don't consume it a ton, but I don't see it. Since like, imagine if it were to actually be talked about on a performance basis as a real alternative. And it will, is James's point, his ultimate point. He's always like, well, but if you see it on the news, if your neighbor brings it up to you, it's
too late.
It's way too late. And it's always too late. But like, imagine if it got 10% of the actual acknowledgement that the price move is really calling for. Same with platinum, by the way, which is crazy. And gold year to date, it's only got it begrudgingly. So long term, whenever the news cycle does start to shine a little bit light, like metals seem to be doing something, it's whenever the market and the price really goes parabolic, and it's so quick that there's really nothing you can do about it. There's nothing we can do about it to slow it down either, by the way.
Yeah, 2 points to kind of confirm that. You guys remember back Q1 2021 during the original Reddit silver squeeze phenomenon era?
Yep.
There was industry interviews on CNBC and Bloomberg. Tyler Wall was on Bloomberg. He did a great job on that interview. And those 2 interviews were helpful in terms of propelling demand to an absolute craziest level we've ever had in our industry.
Wow.
Secondly, there has been some coverage, but it's kind of been, it's kind of been like, hey, silver's catching up to gold right now. And so they've been admitting that silver's been doing well. Okay, nice. But I don't think they're going to give silver its flowers until it passes 50. I think that's where that's when the mainstream's going to finally start to wake up to silver. It's going to take that long, it seems, that we have to get past 50 to prove the fact that silver is going to be a good long-term store of value.
That's the magic number, huh? 50?
Yeah, it's going to be final boss 50.
Final boss. Oh, Matt Wing, he said, when does the Yankee Tim coin come out?
We'll have samples within a month.
Okay.
You were looking for like hours based off of your reaction there. So the
Yeah.
artwork's been approved. Look, the process of getting a die cut the right way and having it to where it's going to look good, not only on the first strike but on the 10,000th strike.
Right.
Let's assume there's going to be enough interest to reach 10,000 at a reasonable time frame. Just talking a little bit of trash, Yankee, but
Oh, my word.
yeah, we'll see samples within a month. I mean, it might be as soon as 2 weeks. I would be surprised if it looks as good as I expect it to look. Then we'll be selling it.
What was that?
A week or two after.
I could have sworn I just saw something flash up on the screen. Oh, anyway, it's coming soon. Okay, all right. So stay tuned, guys. I'm excited. When will we have an Indian head on sale at SD?
Pre-33, we do sell them.
Indian head?
Yeah,
I'm assuming
they're in there.
Yeah, they're in there. Okay,
Yep.
Dean.
Yep.
They're in there, Dean.
We've gone from being, I'd say, barely serviceable a couple years ago in terms of if I were to have a self-assessment in our pre-33 and then 90% as well, depth and breadth of assortment to maybe the leaders across the space and price, certainly for the retail investor. So it's something that, we're proud of.
Cool. All right. Another question here. Is there a limit on the new SD Bullion customer first purchase at spot? What items can be bought at spot?
There is.
What is the limit?
There is.
What are the options?
It's a good question. I believe it's 10 ounces of silver at spot is what the offer has been.
Wow.
And with gold, I'm not 100% sure. If they call the sales line, they can. The people that get those questions more often would be happy to help them.
Cool. D Glass says, has the momentum fallen out of the gold rally? Do you see silver platinum as a good alternative for a massive rally? So is gold rally over?
No,
it's the beginning, right?
I mean, just look at the run it's been on. I mean, it needs some time to digest all those gains. So no, not at all. And there's a lot of people out there who think 4,000 possibly by the end of the year. So no, I think Metals Focus even, which is like, they're basically like establishment London bullion consultant, precious metals consultancy. They said you'll have a new nominal high in gold second half this year. That's what their base case is.
Right.
And so, it's just if it dips, I think if you're looking for a dip in terms of gold, this might be your chance this summer. We'll see if we get below 3,300 maybe again.
Yep.
But this is your shot, I think, to get in gold. It's going to be hard. It's a real hard case to see it going below 3,000 again. We may never see the price of gold.
Well, I remember the same conversation at 2,000. Exactly the same conversation.
And it took a lot longer to get through 2,000, and we had to fight back and forth. And 3,000, could it go below 3,000? Yes, it could. But you would have to come up with a perfect scenario this summer for that to occur. And you could bet that Chinese and the central banks would be buying the dip hard if that were the case.
Yeah. Be a central bank, guys. Buy the dip. Stack what they're stacking if you can afford it. Silver is, though, I think has the bigger upside percentage wise. That's where you're gonna get more volatility. Although I mentioned this to Tim on a prior video too. It's interesting. Gold has been actually more volatile last month than silver some days. It's amazing to see the swings. It's usually the other way around. Usually, like, I got into gold thinking, all right, I'm getting old. 59. I don't need all the volatility, right? But wow, what a ride gold's been given.
One other small note that I would say, when you always want to follow bigger money than you, the big money right now is interested in, they'll contact us, but they're not really that interested in selling. They're interested in what the other options are from a storage perspective, from a leasing perspective, all that. But it should tell you quite a bit whenever someone who has a lot of ounces, which we've been dealing with multiple people like that, are saying, yeah, I'm interested in my options, but no, I'm not selling it. It's going to be mine. I retain title.
What do you think of the Fort Knox bill going through the House right now? I think Massey, Representative Massey, and like three others have like said, no, we really want to see what's at Fort Knox, and not just see it, not a show audit. We want it assayed. We want all the encumbrances documented. We want everything spelled out. Do you think that's just hopium and it's just not going to happen, or is that something that absolutely needs to happen and will?
Yeah, I'm finding doubt that that's going to occur.
Me too.
We don't have to do that for any reason, right? I mean, in terms of the empire, there's no one forcing us to do that. So
true. Yeah.
I think it's just good fodder, and politicians will create those bills to get their name out and such. But ultimately, I don't believe that they'll do that, because to do it correctly would take months, right. And it would take a thorough, multi-point investigation and transparent, procedure to do it. And I just don't think that the United States is A, willing to do it, and B, has, really, I don't think so.
It is I think it's good, but I think it's a logistical nightmare because it's not all in Fort Knox. I mean, it's in New York. It's all over the place. West Point, it's all over. So you need to do it simultaneously to make sure there isn't shenanigans going on. Yeah, I don't think it's going to happen, unfortunately, ever. Scott says, can a privately owned central bank pull the rug on rising gold and silver in spite of inflation? Well, that's a good point. We do have a quasi-privately owned central bank, the Federal Reserve, right? It's not federal in terms of it being the government, but can they pull the rug on rising gold and silver in spite of inflation?
No, I mean, you could have one entity go out there and try and short, but on the other side, there's longs, and not everyone's on the same page. So yeah, the spot might go down, but then you'll just see physical get taken off the exchanges, and you'll get yourself in a tighter noose.
Yep.
So that maybe on a short-term basis, something like that could occur, but on a long-term basis, the fundamentals are what they are, and people are continue to buy bullion. I think central banks will continue to buy gold bullion at record volume. There's no sign of that slowing.
Does it avoid penalties? For the transfer of retirement funds, does it avoid penalties completely, and how long? At 61 years old, would it have to be held for delivery? If you do a transfer, you can maintain its tax-deferred status, right?
Correct.
I've done that many times when I've changed jobs. I've gone from a 401k to a self-directed IRA, and I've done all kinds of stuff like that. Mm-hmm. You can move it in. You'll avoid the penalties completely, and it's really 59 and a half is the magic year, not 61, right? So at that point, you could say, Cole, send me all my Yankee Tim rounds, all monster boxes. I want them in my safe. Or I might say, you know what? It's appreciated so much. I never do this with my own stack, ever. I never sell my precious metals. But if you have it and it's appreciated, I might. I'd probably just have you ship it.
Another benefit of it being in our depository, if someone says just ship it to me, guess what? They don't want to wait 3 weeks. They just want it shipped.
Right.
And we ship out thousands of orders a day anyway. Mm-hmm. So that's not a problem. Whereas I had to go through this process. I have a friend who's a financial advisor who he has a client who has some metal in an IRA. Mm-hmm. He's like, what's that process like? And I kind of told him the quick and dirty, like what to expect. And I said, the number one thing that your client's going to have frustration with is that the depository is going to drag their feet on shipping. Mm-hmm. Because they get to make money as long as the music's going, as long as the metal's there.
Right.
And so you have depositories that have a lot of material that have 2 people on staff shipping. And it's by design. It's like, oh, we need to ship out this order. Oh, I'm on break. And then I got vacation next week. So I don't know. I'll get to you guys in August.
And there's a lot of parties when you deal with a lot of these companies, right? You're talking to somebody on the phone. They don't know if the metals actually show up at the depository. You've seen that.
They don't check.
They never check. For you, it's one side of the building to a different, and I've seen it. It's like it happens, and because you follow up. You have a trail, an audit trail.
Yeah, exactly. No, everything's audited, so it makes it pretty easy. It has to be, right, by design.
Bill says, do you still have the original cowboy round? I didn't see it.
We do.
You do?
We do. Yeah, that thing is very popular. There's a couple variations of cowboy. Everyone sees the rifleman. We have a banner up on the homepage of the website. Rifleman is something that was really, really fun to kind of be a part of creating. That program is really grassroots and authentic. So we're going to let it go wherever it is people want to take it. So there's some antique. There's a 5-ounce.
That
The
looks
5-ounce looks great. You have gold. There's a few different options, right? But yeah, that's something that
When did the 1-ounce antique rifleman come out?
this week.
Oh, this week. That's
Mm-hmm.
I missed it. Okay.
Yeah.
Let's see. Been anything I can do to get there? Been purchasing from SD for about 2 years, but did not know to take advantage of the first-time customer spot deal. Anything I can do to get that deal?
I say if you've been buying for 2 years, you've been taking advantage in the right ways.
Yeah.
You've been getting great value consistently. So it is for first time customers. It's a way to educate.
Right.
But with the way premiums are right now, look, we had a spot deal last week on 90%. So there you go. You can buy
There
a
it
lot
is.
more than 10 ounces of
Oh, you
silver
do
at
have
spot.
great. Hopefully, you've signed up because you do get those great deals coming all the time from SD. Just Live wants to know: are you hiring?
Well, like we said in the beginning, this market ebbs and flows. We're always looking for an opportunity to improve. We think we do plenty of things good, but that's no reason to be complacent. We still got long ways to go. People want to do a lot of different things, and we need to be there to help.
Dean wants to know when you're going to see a Valcambi combi bar.
Yeah, so that kind of brings into the conversation tariffs and what those have meant for the industry.
Interesting.
So it's kind of a nuanced conversation that all comes down to codes that are used on the shipments by the importer of record whenever they're brought over. And with some foreign refiners, they do all the paperwork, which is kind of an issue. With some of them, they ask the importer to do the paperwork. And because the root cause is there's not a tremendous amount of clarity in the actual legislation itself of how it does explicitly apply, then you do roll the dice, for lack of a better term, sometimes whenever you are bringing material in that, depending on who the agent is and how it's coded, you could be slapped with. I mean, gold's $3,300. The tariff at 30%. I mean,
wow.
Have fun. Who wants that? And usually, by the way, whenever we're bringing in gold from Switzerland for us, I want to have it at least be 2,000 plus ounces. So you do the math: 2,000 ounces, $3,300. It'd be a tremendous bill. So I'm not interested.
Okay.
So people have been a little bit treading lightly. There have been some shipments that have been brought over with people sending out trial balloons through the border to see how they get handled. Are we a part of that? Generally speaking, yes. So we're looking for opportunities because we want to have that stuff too available. We have the cross and flag bars that I really
I
like.
love those. Yeah.
And the 10th ounces we still have on the shelf because we ordered a bunch right before all this hit. But yeah, so the combi bars, those are kind of subject TBD. I think, though, most of these kinks will work themselves out in the long run. But as this has happened, you've seen a lot of production capacity in the world shift. This is always the outcome in physical delivered metals is like as big as the market you feel like it is. And in some ways it kind of is. And everyone that I talk to on the trading side is like, we have more metal than you have money. Okay, great. I'll talk to you after 5 days of hot demand and you're telling me it's going to be 3 weeks on some of these things. That's just how it goes. There's just never enough material to actually meet a real tidal wave of people in the general public wanting to engage with the asset class. So it's never able to respond.
I got 3 questions. 2 for James, 1 for you, Cole. But here's the trick. I'm going to tell you the question, Cole, for you to think about, because this one's a tough one. Okay. And it's been a lot of people ask it, but I want you to be able to And then I'm going to go right to James with these other 2. So your question to mull over is, how do you base your spot price? Okay. So James, yours. Do you think silver will ever become scarce due to the constant rise in supply and demand and price of precious metals? Relic asks. Yeah.
Yeah, I think we can see another scenario or situation that we saw during the Q1 2021 scenario where you had just outsized demand, or when banks start failing again.
Yep.
You start having
The
ACH runs,
banks. Yeah.
banks. That ultimately, the fear trade is ultimately what brings in that tidal wave of buying and clears out inventories, because we're only capitalized in terms of an industry so large, we're only so big, and outsized demand clears off the shelves, and so it takes a long time to restock those shelves when those outsized demand eras come. And that's just the way it is, in terms of the industry. It has only so much capital, and when you have massive inflows of buying, it just clears the shelves. So that will occur again, I believe.
And the second one from Big Test Unit, can you briefly give an overview of the leasing of precious metals? What is that? He wants to know.
So leasing in precious metals happens generally out of London. A lot of times you'll have a party that owns metal, and then there'll be parties that need metal, and they're willing to lend it out to those that need the metal for a price. And sometimes it can get exorbitantly high. I think when Warren Buffett came into the market in the silver 1997, 1998 buying that they did in terms of Berkshire Hathaway, you had 1 month lease rates in silver get up to like 80-90%, because so many people had to take demand, and in order to do it, they were willing to pay such high exorbitant fees on a short-term basis. So that does and can happen in terms of lease rates going high, and backwardation eventually probably will happen as well. And so all backwardation is simply that the price at the moment on spot is much higher than the future. So people aren't willing to wait; they just need the metal this moment.
Thank you for that. Cole, are you ready to answer that spot price question?
Sure. Yeah, we
do you do it?
We get this question pretty commonly. We use a third-party provider that provides a price feed that some others in the industry use as well. Of course, there's things you can do as a company to then interact with that price before it gets pushed automatically out. But of course, we're not really that interested in doing that. It's a combination between future and over-the-counter prices, as well as the market aggregators or the price feed aggregators, and where they're seeing data points at any given point. So, we deal with this whenever we're buying. There's a fix, of course, on gold twice a day. There's a fix every day on silver. There's a reason they do that, is try to get everyone in the room on the same page in terms of what the price, what everyone agrees the bid ask is. Okay, great. Why would they ever need to do that if it was as simple as it's just this number? It's not as simple as that, because you have participants on both sides, and everyone has slightly different data feeds. And there's a difference between over the counter and a futures price. And sometimes we see that spread get really, really massive, where the price for a physical ounce that you're taking delivery of has nothing to do with anything other than what someone is able to offer you that physical ounce. And futures, like James talking about backwardation and contango, all that comes into play. It sounds like I'm using a lot of words to just confuse people. I'm not. It's an aggregate, and it's a midpoint between futures and over-the-counter pricing, and there's people that are using that data to then feed in, and we're using that and trying to midpoint it as best as we can.
Right.
For context, I can call the biggest desks in the space and ask for a price, and I may get, if I make 5 calls, I may get 3 to 5 different answers.
Amazing.
So that's kind of,
thank you for that.
It's consistent.
You can see why though people get confused, and every online bullion dealer does it. All the sites that I go to, a lot of them are different, and a lot of them do average in between the bid and ask. A lot of them factor in costs. It's a very difficult thing to navigate.
My advice to people is you can monitor spot. If you're monitoring a paper feed or a futures feed on spot, it's very, very often going to differ from what we're offering for a physical ounce by a little bit. If the market's particularly volatile, it may differ by a little bit more, but we may have, that may be an output of the price we're having to pay for that same ounce. Look at your out the door pricing, including any taxes, including any shipping, including any fees, any of that stuff, because sometimes the people, the competitors, if you will, that are looking to offer something that might be too good to be true, some people just have a built-in commission to their salespeople.
Yeah, I'm
It's
glad
like,
you said
that doesn't work.
out the door pricing is so important, because a lot of people listening right now, you're not buying a futures contract when you want to buy some silver from SD Bullion. You're buying out the door physical metals that have been, fabricated and ready to ship. There's a lot of cost. So that's a part of the issue there too. All right, CoinStacks, man. I read your comment here, a question. It's pretty cool. I am 74 years old. I still teach school. Wow. Thinking about retiring in a year or two. You go, man. Should I move my retirement to metals now or wait until I retire, since I am older? And it sounds like you're a young guy too. So if I was going to answer that one, I would say you could do it now. It really is, the question is, where is your retirement currently? What kind of risk at age 74 are you willing to take with the markets, equities, bonds? It's really interesting to know where your risk is. You don't have to do it all either. It can be a hedge, but I wouldn't wait, quite frankly. I would consider it now, and I would definitely consider you talk to SD Bullion about it. That's my take. James Ferris says, not a question, but I just wanted to say your packing and shipping department does a phenomenal job. Never, ever had a problem. Yeah, I got a box right here. I just opened up for Misty Bullion.
Great feedback. We appreciate it. It's difficult, and it is expensive. And guess what? Insurance rates have gone up, quite a bit over the last year and a half. Customers wouldn't really know that, because you haven't seen really a difference in our pricing or minimum spend in order to get free shipping. But great feedback. We're not batting 1,000, but it's so important, even, in the event that people are sending materials back, it's so important that you pay attention to how you're trying to, if you're selling it, how you're trying to package that, if you're going to use our solution, or if you're going to cowboy it, for lack of a better term. Okay. But, be confident.
Yep. James also had a follow-up, said, what were he wants stats here. Okay. So maybe you can help him here. What were SD Bullion's largest individual orders in ounces for silver and for gold? Do you remember some stop everything? Oh my word, guys. You pull the ripcord. It's like, well, wait a minute. Anything huge come to mind?
Yeah, for silver, you're approaching not quite 500,000 ounces, but you're in that ballpark.
Wow.
And for gold, you're talking multi-thousand ounces. So closer to 10,000 than zero.
That's an order.
Yeah.
Wow. Maybe I just get one. D-Wiz wants to know any update or hints on that. This was going to come. Commander series.
Yeah.
You're not going to spill the tea, are you? No,
I'm thrilled. There's the continued excitement. We look to get better and better every release. We've tweaked things a couple times. It's like the constant question is, how can we improve this? Yes, it's coming. It'll probably be 2 months, would be my guess. We have some other stuff coming that, do you have access to your email right now, Yankee? Or
email?
How could I
Sure.
share an image? Well,
Yeah,
if I don't want to send an image where everyone can see, because then I'm really letting the cat out of the bag.
Oh, you're going to send it to me only?
Well, I just want to get your live reaction. Whenever I hinted earlier,
yeah.
I said we're going to have some stuff that I think is pretty cool.
I won't do what I did a little while ago when I had a little hiccup there with the Yankee Tim round. I don't know what happened. It just kind of flashed there for a minute. Well, whatever. I won't do that.
Oh, really?
Yeah.
Did everyone get to see it?
I don't know if it seemed to be just a quick little, and it was gone.
It's funny how that works.
Yeah.
That's not for public consumption.
All right,
but
I will
check your email. You get a response. This is an idea that I don't know, happened about 9-10 months ago.
Oh, okay.
So we're working on that one right now. Those dies have been made, and it'll be coming.
So while we wait for that, James, the question. We're almost done, guys, with the Q&A here. But Jimmy says, at what GSR would you swap silver for 1 ounce of gold?
That's a good question. Me personally, I feel like the 2011 lows is a conservative target. So low 30s. But there's people out there who feel like 50s, 40s
Okay.
is time to start thinking in terms of doing it like bit by bit, little by little. If that's part of your plan long term to swap for some gold, then 50s, 40s, you might want to consider start to nibble in on that. But I think the 2011 low in the 30s is entirely reasonable that we'll see that again, because 2011 was, I think, just kind of a small little entree. It was a little hors d'oeuvre before the entree comes of eventually where this can go in a mania.
All right. I did get the email. Oh my goodness. The detail on that is amazing. Can I say like what shape it is or not?
We can't.
I
I don't
can't
want
say
to. I don't want to share
anything.
anything.
Oh,
There's
that
not
is
many people coming up
beautiful.
with. There's not many people coming up with new or creative ideas anyway. So I don't
Okay.
want to give people an
All
opportunity to
right.
try to
I'm staring
come
at it
rain
right
on
now. Guys, when is
rain
this
our party.
when are they going to be able to see this? Because I feel
I'd
guilty
say
looking at it.
I think I have a sample en route to me right now.
Okay,
So
cool. All right,
I'd
soon.
say yeah.
All right.
Yeah.
All right. Dean, you mentioned cleaned pre-33. Why do people say it's bad and why do people say it's okay? Does it affect the coin when you're ready to sell? No. I mean, to me, a lot of people want to get into numismatics and they want to get, pre-33 gold that is in extra fine AU, I should say, or, really, really good high quality gold. That's fine. I'm a stacker. I don't care. To me, it's like circulated silver coinage. This is circulated gold coinage. I'm stacking it. I want to be able to use it potentially in a different scenario. I don't want to pay high premium. I want it to be cheap as possible, right?
Yeah.
So for me, I like the raw gold. I mean, if it's cleaned, fine. It looks pretty. I don't care. It's like cleaning your constitutional silver, 90% silver. It's no big deal. Here's one thing that I do want to just quickly say. Be wary of bullion companies that will try to use fear and tell you that an upcoming gold confiscation is going to take away, the government's going to take away your gold unless you buy these really high premium, expensive, certified pre-33 gold, because they didn't do it last time. So they won't do it again, right? Because, of course, we know that far long ago, whatever rules they had, they have to apply again, right? It's bogus. They're trying to sell you they're conning you. So be very careful of that story, that
Yeah.
fear tactic.
The most simple way to kind of process it or think about it is, in general, bullion is a commodity. So the incentive of a customer to interact with and purchase a higher price is next to zero, right? They want
Right.
value. They want it at their house. So if someone has the ability to charge a higher price and pay someone a high commission sales environment to go target, a set of people, maybe you, they're going to get it back somewhere. And that means they're probably extracting too much value out of the end user. So it's just fundamentally like anyone that's doing this with IRAs, if they're buying, calling you 100 times or whatever,
Right.
it's just different. Now, the one caveat with pre-33 is that sometimes within a deals environment, there's pockets of inventory that come available. So you're always going to have AUs, which are priced less than BUs,
Right.
which both are priced higher than XFs, which are better than clean. Okay, great.
Yeah.
But sometimes someone I have a batch of 1,500 BU coins, let's work out a deal, and I can extract value that we then immediately try to pass on to the end user by, guess what? Discounting the BU coin for a limited amount of time, 5 days here, come and get it. It's cheaper than it should be, but that's what our definition of a deal is and what the customers want. So while you're looking at it as the gold material and the gold value is what the gold value is, and I would agree with that, sometimes there are opportunities to extract marginal wins, if you will, on premium arbitrage by interacting with something that is discounted for a limited time, almost every time, because we were able to buy it cheaper. And sometimes within the pre-33 environment, we've done a couple hoard deals. I don't know if people are
Yes.
familiar with it. Those are basically a limited amount of coins that are coming from one specific collection. Any given time, we give them a different name so people know what they are. Those are kind of cool. We always do slab those just so people do understand that they are part of the miner hoard or the oil baron hoard or something like that. But usually the story there is there's someone who's been collecting this stuff for a while who had access 80 years ago to high quality coins before they were in circulation for 100 plus years, and they maybe set some to the side that they just liked, and then those things eventually get offered on the exchange auction markets, and then we're able to buy it all and then just say, hey, there's only 400 coins, but here it is.
All right, so we're going to do rapid fire now. So you only got no more than 5 seconds to answer these questions. I'll try to do it myself, right? Okay. Does SD Bullion buy sterling flatware?
No.
Okay. Will you release the complete Commander series in a limited edition set in silver and gold? Yes?
Yes.
Ooh, nice. Hey, all, I'm from Australia. Is there any benefits living here in regards to stacking, that is? James, are they at all-time record highs now in the Aussie dollar? I mean...
Yeah, the silver price is at all-time high. It's over 50. So in that last SD Bullion update there, I had a 200-year chart that shows the look of it, and that chart reflects our future. It's basically they're just front-running ours. So it's worth looking at that chart just to kind of get a feel for what our chart's going to end up looking like in the future. So in terms of Australia, they mine a lot. So I mean, there's a lot of precious metals in Australia. So it's a pretty good place if you're a precious metal investor.
Is there any risk in keeping metals at a bank safety deposit box? I get this a lot.
Myriad. Yeah, there's a lot.
There's a lot of risk. Don't do it.
Not insured by the FDIC. If the feds want it, they can go into it with any type of, judge. They can
court order. Yep.
Court order, or if somebody somehow has an extra set of keys, they could steal it from you, and who knows? It's not insured. So yeah, I mean, it's risky.
In 2 words, bank holiday.
All right.
All right. So I got one last one, and then I'll wrap it up here. Ask them both, what will the price of gold and silver be on January 2026? So January 1st. Happy New Year, James Cole. What's the price of gold? What's the price of silver? This is just for fun, guys. They don't have a crystal ball. They don't know. I don't know. What do you guess?
2026.
Yeah.
I'm going to guess $43. $43 for silver and $3,700 for gold.
37.
Yeah, I'd be probably closer to 3,900 on gold and probably 35 and change on silver.
Okay. I'm sticking with 40 for silver, and I know I can't do it. 3,700 for gold. That's just a guess. Don't hold us to it, guys. All right, so that's the end of the Q&A. Anything else that you want to share with us? Anything, James, that you want to encourage the stackers right now or warn them of because of what we've been seeing over the past week, and anything you want to say too as we wrap it up?
Yeah, I mean, it's going to get more volatile as we get higher up toward 38 and then in the 40s. So it's still basically a wall of worry to get beyond the old, number of 50. I think 50 eventually happens probably next year at some point. We might get beyond 50. And so, yeah, this is a long-term bull still. I think you have a situation where the bullion over bonds trade is going to continue. So keep a long-term perspective. I think this is going to go on throughout this decade and into next. So we still have a long road ahead of us in terms of this playing out, how I think it's going to go in terms of valuation gains for bullion versus other asset classes.
Awesome.
So we got plenty of road ahead, and it looks really good where we are.
All right. Before you say the last word here, Cole, Tim H., he says he's been on 2 shows, and my questions were not asked.
Uh-oh.
Oh, we got mutiny in there. Yankee, I said a Q&A with 1 minute of the box being available. I am so sorry. It may have scrolled off. Come on. MR's going to give me a hard time here. He's already laughing at me. Tim, is it okay to ask it right here in the chat? Go ahead. Type it in one more time. Hopefully it's not too long.
Oh, it better be a good one.
I know, right? Spot. I know. Now I'm really being, oh boy. Okay, Cole and James. This is a good one. I apologize. Why do you use plaid? He says, there it is. You can see it right there in the chat. To data mine our bank accounts. Well, that's assuming their data. Yeah, I know what you're saying. So what does SD do with our bank account data they mine? I have learned not to trust plaid. customer
it's a
service had no
safety.
idea.
It's a safety and security thing. They won't have any idea because they weren't a part of the decision making process to incorporate something like that. You want to be able to have multiple layers to protect people's information and verify that the entire transaction process from beginning to end is very secure. And as far as if you're purchasing something with a credit card and you are sharing your credit card number on the phone, that gets automatically deleted from our call recordings. So we go to great lengths to work with specific providers of solutions that do help provide security and integrity throughout the entire checkout process and ensure that your funds are your funds and you have access to it. And we're working with who we think we're working with, because you'd be shocked at the amount of people who have maybe ulterior motives that would maybe otherwise hit a bullion website.
Thank you. Give me a hard time for that. And I did see a super chat come in, a couple of them. Richard Roach, thank you for the super chat. Big Test Unit. Steely Ballow, will there be Tim's and Harry's that are fair to sell to in 20 years? My local coin shop dealer is retiring soon. That's a big problem. Local dealers, a lot of them are older. A lot of them are struggling. I've seen doors close all around. And I can understand why he's asking. 20 years. I guarantee you Tim won't be doing it. Harry might be able to be doing it, but it is. It's a big change, I bet, coming. I don't think it's going to take 20 years. The local coin shop.
Yeah. They're sometimes strapped in terms of their ability to, let's just say, maintain liquidity in the ways that you need to and cash flow to operate a business, which at the end of the day it is for them.
Mm-hmm.
So while I would like to say that there will be more coin shops, I don't think that's the direction we're going. It's not the way we've been going digitally with bigger enterprises, and it's very costly to operate and compete a metals business. It just is. The barrier to entry is massive, just because an ounce of gold is $3,300, and banks don't really want to deal with you to begin with. So I know Tim has had that issue, and so there's a lot of powers that be, if you will, that try to make it pretty difficult to establish any degree of footing.
Mm-hmm.
So you're not going to see more, you're going to see fewer. So if you have a good one, excellent. If you don't, find an opportunity to give us a chance to earn your business. And, it's our ambition every day not to let you down.
Gold, did you see my behind the scenes video at Tim's shop?
No. When was that?
It was last week. It was unbelievable.
I'll check it out.
You need to, we got to talk.
Yeah.
we got to help our friend Tim out.
Yeah.
We really do. Yeah. I just feel like he always says yes. His customer service is through the roof, awesome, but it's overwhelming him, and I just it really I got to do something. I'm trying to help him, but I think local coin shops all around the country are going to be struggling. And I think the online is also very popular. And Tim doesn't want anything to do with online. He just doesn't want anything to do with it. He said, Yankee, I got to charge taxes on every state. I got to deal with all that. And he's already overwhelmed with shipping. It's just not his bailiwick. But he needs some help, man. We got to talk. All right. Well, this is great. Thank you guys so much for joining me on Mastering Metals, episode 20. We'll do it again. We do it each month. Next month, maybe Cole will try to talk Chase out of being on the show, but I'm ready for either of you. Okay? All right.
Happy to be here.
All right. Thanks, everyone, for joining us. We'll see you next time on Mastering